Our next guest says it's not just a Cypriot problem. With us from Nicosia, the Nobel Prize-winning economist and economic advisor to the Cypriot president, Christopher Pissarides. Nice to see you, Christopher. How damaged has the Cypriot economy been over the last few days by, A, the imposition of capital controls, the inability of people to get money out of bank accounts, and the damage ultimately done to its financial sector?
Well, there's been a lot of damage, obviously, these last weeks because banks were closed and the economy cannot function without a financial system. There were only people in supermarkets buying food. All the other stores were empty. You could see that. You couldn't do any big transactions. Businesses were waiting. It was obviously a situation that was getting more and more desperate, and I believe that's how the Cypriot delegation in Brussels has been pressured into accepting what they accepted the very last moment. Now, you also asked me what would be the implications for the future for the economy of Cyprus. They'll be disastrous. They'll be disastrous in the near term. The only good thing about it is the uncertainty has been resolved. But it's like saying I've got a pain in my leg, I go to the doctor, he cuts the leg off, and then we say, well, it's good that you don't have the uncertainty about that pain anymore. You know, but you walk out without a leg, and that's how I like to think of the Cyprus economy.
I'm sorry,
the Cyprus economy had a business model.
When you say it's disastrous, why is it disastrous? Is it because senior bondholders are taking such a hit, or is it just because, in general, this should have run much deeper?
It's disastrous for two reasons. The first one is that depositors are being asked to bail out a bank that is in trouble. And that doesn't happen nowadays. We formed a banking union where this was never in the union. Big banks in Britain, in the United States, elsewhere ran into trouble. Depositors didn't suffer any losses. So that's one thing, that depositors are losing confidence in their financial system. The other reason is that Cyprus developed as a small economy with a very highly educated labor force, probably the most highly educated labor force in Europe in terms of university degrees, and concentrated on business services and financial services. And now the German finance ministers and others are telling Cypriots, this is not a good model of economic development for you. You have to think of something else. Now, what do all those qualified people do? You know, all those who have degrees in accounting and finance and banking studies from British universities, for example. They become unemployed or they leave the country.
Yeah, and we've seen that. We've seen that in other parts of the region, as you say, pretty disastrous. Chris, would Cyprus be better off outside the Eurozone?
Well, it's not something that we should even think about right now, because going outside the Eurozone means that you have a government with no money issuing money. So obviously no one will have confidence in it. But I do think, and there is strong support that I hear people talking now on television and the radio, that once the dust settles down and once Cyprus settles into a new type of economy in the next few years, we should sit down and think very carefully about the future of this country and whether the future is better to be within the Eurozone or without. And I also recommend that all small countries in particular do their homework, because as we've seen, if you run out of trouble, then you are not necessarily going to be rescued in the way that is most beneficial to your economy.
Christopher, before the break, you were telling us how this is a half-cobbled affair. You think it's like, you know, a country going to the doctor and just getting a leg cut off. And then you went further along in saying that actually you think that when the dust settles, Cyprus should seriously think about leaving the Eurozone. Can you, explain that further? Why would Cyprus be better off outside the Eurozone?
Well, the reason I'm saying is that we're going to have a banking union in Europe, and the details of that banking union haven't still been worked out. But the idea behind it is that there should be a common supervisor, that the financial system within Europe should run as a single financial system. And that means that if a country has a highly qualified labor force in banking business, and it has good communications and is within the Eurozone, it could easily become a financial center for that union. And now they are telling us that no, you are too small to be a financial center. Now what does that mean? Does it mean that the government of Cyprus still remains responsible for the financial system of Cyprus. Well, in that case, what's the benefit of being inside the Eurozone? We might as well have also our independent central bank deciding the policy that is best suited to our business model. You know, from that point of view, I mean, the behavior of the Eurogroup, it wasn't one that would give you the impression, if not convince you, that here is a single unit of 17 partners trying to do the best for their continent and for their currency. It was more like, here is a little guy who's misbehaved and we'll put him down.
You also added that you think that other countries, other small countries, must look at what is going on very carefully as well. Which countries do you mean specifically?
Well, for example, I heard that Cyprus has an unprecedented large financial system being said. That's not true. Luxembourg has a bigger financial system. You know, is this business model good for Luxembourg, and will Luxembourg get a better deal if it runs into trouble? We don't know. Even more importantly, Malta now is following the lead of Cyprus. It has been following the lead of Cyprus for the first few years and developing its own financial services, attracting its own big Russian investments and foreign companies. Well, Malta had better think very carefully now if that's what they want to do, because right now they are doing well because they're only just starting. But remember, Cyprus started 30 years ago, and it's been doing well for the first 27 years until the crisis hit. Now, will Malta be treated differently if it runs into trouble? It shouldn't be. You know, everyone is treated equally in this union. Then, of course, Ireland, small economy in banking trouble, we've already had it. Iceland is outside the union. I guess they were not considering coming in, but now they will be even less likely to want to come in because they sorted out their banking problems in a way that was much more satisfactory to their own domestic depositors. And then you have Spain in deep trouble now. Spanish depositors should now think very carefully whether deposits over the insured level are safe in the banks that there are. You know, if I were Spanish now and I had more than 100,000 euro in a bank, I would take the excess immediately and go and open an account in another bank, completely different from the one that I have it now, just in case they put all accounts together. Now, that's going to cause so much disruption to the financial system.
I was going to ask you actually about that. You're talking about Luxembourg, you're talking about Malta, you're talking in general about this precedent, you know, setting a precedent in terms of the way that depositors look at their money within the European Union. Do you think it will dramatically change the landscape, or we wake up 2-3 months from now and realize that a lot of people have been shrinking their bank accounts or just getting their money out of the European Union?
Well, it has to change it because it's the first time that it's happened, and they're saying that Cyprus is small and it's not systemic. It may not be systemic in terms of contagion. You know, if the Cyprus economy goes into recession or into depression, then it may not affect the rest of the Union. But in terms of rules that the European Union makes about the banking system, of course, you know, they're committed to following the same rules everywhere. You know, the idea that you say, well, we're going to do something here, but it's the last time we're doing it, first and the last time we're doing it, and next time we're going to do something else, it's just not on. They are only called partners, you know. So in terms of establishing this principle that if a bank is in trouble, then the depositors of the bank, the owners of uninsured deposits in the bank, have to pay for that bank to recapitalize it, is new in the European Union. And therefore we now have a new type of rule, and everyone within the European Union, Eurozone I mean, has to sit down and see what that implies for their own finances.
Chris, we'll leave it there. Thank you as ever for your time. Chris Pissarides, President of Cyprus's Council of National Economy.